Hello and welcome to Business Incorporated. I'm Ladi Williams. Coming up on the program, AFDB launches $2 billion credit facility to fund women-owned small and medium enterprises in Africa. And World Bank says Morocco's budget deficit is under control. And General Counsel of the World Trade Organization meets today to consider Dr. Ngozi Okonjo-Iweala's appointment as a new Director General. Begin this week's show with market numbers from the African continent, which were all in the positive territory, as South Africa's GSE jumped with the most by 1.10%, while Nigeria's main index was seen at 0.05% higher at intraday. The EGX30 was not left out in the gains as the index rose 0.18%. The market in Kenya closed positive on Friday. And major markets in the Middle East were mixed at intraday. In the UAE, Dubai's main index surged 0.73%, while Abu Dhabi's index declined 0.31%. Elsewhere in the region, Saudi Arabia's index advanced 0.76%, while the Qatari index shed 0.49%. And European markets advanced today after a rally in Asian shares overnight, with successful vaccine rollouts fueling hopes of a global economic recovery. Chelsea Delaney joins us from Frankfurt Stock Exchange to give us updates from the European scene. Hello, Chelsea. Thank you for joining us. So the global stocks global stocks have started the week out at record highs. What are investors watching this week in Frankfurt?
Well, the DAX here in Frankfurt also starting just shy of another record high. So European stocks are definitely following that momentum that we've seen in the Asian trading session higher. What's going to be really key for investors here in Europe this week is really two things. One, which has been really a major market driver over the past several weeks, is the U.S. stimulus efforts. The fact that Joe Biden and his administration are getting closer to a $1.9 trillion stimulus effort has really lit a fire under stocks here in Europe, as well as many investors anticipate that economic stimulus will filter through to stronger trade and business within the European Union as well. Another major event that investors are watching is the fact that Italy has a new prime minister. Over the weekend, Mario Draghi was sworn in as prime minister of Italy after a previous government collapsed in January. So there's a lot of anticipation for Mario Draghi, who's the former head of the European Central Bank, but he will start to lay out some of his policy proposals and his plans for reviving that economy.
And Germany on Sunday implemented border controls in its frontiers with the Czech Republic and Austria. Businesses have warned the move will disrupt supply chains. What are we seeing so far today?
Well, there does seem to be a bit of disruption along the borders already. Some news organizations are reporting that, especially along the German border with the Czech Republic, we're seeing delivery trucks lined up for about 22 kilometers. So many trucks seem to be having to wait for several hours to get into Germany from the Czech Republic. And that's a big problem for German industry, and particularly the German auto industry, because many German auto companies are very dependent on the Czech Republic for parts and for supplies. So some of those trucks could be carrying supplies that these auto companies need to keep production running. So we have heard from the Auto Industry Association that we could start seeing some auto companies have to shut down production here in Germany as soon as today if we don't see the situation at the border stabilize.
All right, and on the coronavirus front, French drug maker Sanofi says its coronavirus vaccine won't be ready this year, and the EU had bet big on this vaccine. What does this mean for its already lagging rollout?
It's definitely a setback for both the European Union and also for Sanofi. The Sanofi vaccines, Sanofi is developing two different vaccines. Both of them have now been delayed over the past couple of months, and both of them, the company says, are not going to be ready by the end of the year. So the EU had really put a lot of money and a lot of hope on to the Sanofi vaccine. They had ordered about 300 million doses of that vaccine. Now it looks like they won't be be able to get that this year. And of course, the EU has already been really lagging behind other countries like the US and the UK in terms of overall vaccination rates, in part because we don't have a very strong supply of coronavirus vaccines right now. So this will certainly put a dent in those plans. But the EU, for now, is staying quite optimistic. They have struck other production and supply agreements with the other vaccine companies like Pfizer and AstraZeneca. And for now, they do expect that those companies will be able to fill in this gap that the Sanofi vaccines are leaving.
Okay, I guess we'll see how that plays out. All right, Chelsea, thank you for the update and do enjoy the rest of your day. And the British pound hit a 33-month high this morning. What's driving the sentiment? Let's have a talk with Juliana. Hello, Juliana.
Hi, Laddie.
Hi, great to have you. So earlier today, the pound hit a 33-month high. What drove that move, and is it still sustained this intraday? And is the sentiment filtering into the equities?
Yeah, the sentiment is still there at intraday. 33-month high against the dollar. That's almost the best it's been in 3 years. It's also enjoying the pound sterling, a 9-month high against the euro. I think the fundamental backdrop has got to be Brexit. You know, can't talk about the pound and not talk about Brexit. That historic signing of the UK-EU trade deal on Christmas Eve has really rallied pound sterling. It had not been performing very well because we were in this will we, won't we, no deal. We finally got a deal, and sentiment has been strong ever since that. I heard you talking to Chelsea in Frankfurt about the global vaccine race, which is going particularly well. Britain, one of the fastest countries in the world to roll out the vaccine. Yesterday, we hit that 15 million mark, and that's what really is pushing sentiment this morning and into intraday. There are a lot of stocks that are doing particularly well too, which isn't usually the case. When the pound rallies, usually the FTSE 100 internationally focused stocks fall back. They haven't today, and that's because there is all pointers showing that we could be getting out of this lockdown. You see, I'm so excited; it's actually locked my tongue. So the BA owner IAG, they're up 4.9%. Royal Dutch Shell up 3.4%. TUI up 4.2%. Barclays are even up 4.4%. The economists are calling these the vaccine bounce back stocks. So at intraday, the FTSE All Share is up 1.49%. The FTSE 100 is up by 1.55%. And the FTSE 250 up by 1.34%. So triple digit raises there. In currencies, the British pound, again, as we were saying, up against the US dollar by 0.39%, up against the euro by 0.31%, and up against the Japanese yen by 0.78%. I got there in the end.
Interesting rally there. So it's 50 years since the UK's currency went decimal, ditching Tanner's shillings, florins, and introducing new coins, including the 1p piece. This is marked every February 15th. How is it being marked today?
Well, I've got to tell you, it's not the most exciting news stories, but I did get out my history book because, of course, it does have some significance because, yes, 50 years ago today, Britain now became a decimal point-based economy. So rather than using a shilling, we started using pennies and pounds. At the time, it was 12 pence to a shilling. And then, of course, it moved to 10 pence, 10 pennies to a 10p. Goodness me. So I did actually print out some interesting facts because there aren't no celebrations, of course, today because we are in a lockdown and there are so many issues concerning the economy. I think that's why the Treasury and Downing Street have been completely mute on this. But since we became a D-Day economy, a decimal economy, price rises have averaged 5.6% a year. A pound in 1971 has the buying power of £14.24 today. Also, as well, an interesting fact that I printed off very quickly. If somebody had invested £1,000 in a UK tracker fund in 1971, it would be worth 252,204p. So that just shows you what moving to a decimal system has done. But the shillings had actually been introduced in the UK under Henry VII in the 1500s. And yes, so we had been doing that system for almost 500 years until we came to the light, and we made it much more easier for people to count their money. A history lesson for the viewers there.
Interesting facts, I must say. And we're about to have the first female African head of the WTO, in the person of Dr. Okonjo Iweala. How have Britons welcomed this development? And as a woman, what does it mean to you?
Well, of course, you know, with the hundreds of millions of women around the world and the millions of Nigerians I've been celebrating all weekend. I was celebrating before, but of course it was a kind of unnecessarily delayed announcement. But what amazing news this is. We haven't actually heard much from Britain. I think that's because Dr. Ngozi obviously pipped Dr. Liam Fox, the former Secretary of International Trade in the UK, to the post. And she obviously beat a very impressive crowd of nominees to actually become the Director General of the World Trade Organization. Yesterday, the Right Honourable Mark Simmons, he was the former Minister of Africa, he wrote a really gushing piece actually in City AM, which is a city newspaper for the Square Mile, basically saying that she is the right person for the job. And of course she is. I think, you know, once all the plaudits have died down and we get to the serious position, it is going to be a tough job. But of course, if you look at a CV as impressive as hers, she is potentially the only person in the world that can reform the World Trade Organization. It is in its deepest crisis in history. It's got a lot of beef with America, and that isn't just because of Donald Trump. There are issues with COVID-19 and world trade anyway, especially as people are trying to stop the lines of global trade and become more nationalistic. But, you know, this is absolutely fantastic news. Congratulations to her. And, you know, fresh leadership headed by a Nigerian female, you know, long may it continue.
Yeah, incredible. And big congratulations to her. All right, Juliana, thank you so much for the update, and do enjoy the rest of your day.
Thank you.
All right, stocks in Asia Pacific rose today with multiple markets in North Asia closed for Lunar New Year holidays. In Japan, the Nikkei 225 surged past the 30,000 level for the first time in more than 30 years, rising 1.91% to 30,084, while the Topix index gained 1.04% to close at 1,953.94. South Korea's Kospi also saw robust gains as it jumped 1.5% to close at 3,147, while stocks in Australia edged higher with the S&P ASX 200 up 0.91% on the day to 6,868. MSCI's broadest index of Asia-Pacific shares outside Japan gained 0.57%, and markets in China, Hong Kong, Taiwan were closed for Monday for holidays. And futures tied to major U.S. equity benchmarks rose early Monday as Wall Street looked set to begin the week with modest gains. Dow Jones Industrial Average futures rose 0.52%, while futures tied to the S&P 500 rose 0.47%. Nasdaq futures, on the other hand, declined 0.26%. The major averages finished with modest gains for the week as a strong rally to begin February has taken a slight breather. And oil prices rose to their highest in more than a year earlier today after a Saudi-led coalition fighting in Yemen said it intercepted an explosive-laden drone fired by Iran-allied Houthi group, raising fears of fresh Middle East tensions. Brent crude was up 1.1% at $63.09 a barrel after climbing to a session high of $63.44 a barrel, while U.S. West Texas Intermediate crude futures gained 1.5% to $60.33 a barrel. Oil prices have rallied over recent weeks also as supplies tighten due largely to production cuts from the Organization of the Petroleum Exporting Countries and allied producers in the group of OPEC+. And we'll take a break now. We'll bring you more stories from Africa when we return. Do stay with us. And as major economies in sub-Saharan Africa continue to release their inflation data, recent trends point to a stabilization in South Africa, Ghana, and Ethiopia. But there's been an increase in Kenya and Nigeria. What is responsible for these, and what is the general outlook for major economies in the region this year? Matt Kindiger, an associate practice lead for sub-Saharan Africa at Frontier View, joins us now to provide answers to these and more. Hello, Matt. Thank you for joining us.
Hello. Thank you for having me on the program today.
Yeah. So in recent months, we have seen rising inflation in Nigeria, Kenya, but an easing of inflationary pressure in Ghana and South Africa. What has driven these trends?
Yes, so we have seen certainly higher inflation in Nigeria, and this has mainly been driven by weakness in the naira. We've also seen underwhelming agriculture output, and that has driven up food prices. We've also had lingering supply chain disruptions from COVID and border costs as well, a border disruption which has raised costs for importers. But in South Africa's case and Ghana's case, broadly, it's a result of, or lower inflation as a result of improved currency stability in recent months. And specifically in South Africa's case, we've also had a very underwhelming set of aggregate demand data coming through, which really suggests that demand has kept prices relatively weak. But also in Ghana's case, we've actually seen a longer term trend in terms of lower inflation rates over the last couple of years. And as COVID-related trade disruptions wane, we expect this trend of lower inflation to continue in Ghana.
All right, looking ahead, what are your inflation expectations for sub-Saharan Africa for 2021?
So very broadly, we do expect inflation to continue to decline across the continent. So we don't expect inflation to rise to the levels that we saw in 2020. And this is mainly because of a reduction in COVID-related disruptions. And we are broadly expecting more currency stability, which will mean less upward pressure on prices. A very good example is in West African Francophone markets. More currency stability of the franc means we could actually see very low inflation. And in countries where inflation is rising, such as South Africa and Kenya, it's unlikely to rise significantly. I would say Nigeria is an exception. We are expecting higher inflation this year than in 2020, mainly because of higher fuel prices and downward pressure on the CD. And inflation will remain high in Angola and Ethiopia. Double digits is likely.
Well, how will inflation trends influence monetary policy responses by central banks across the continent this year, and how will businesses be affected?
Well, generally, we don't see a significant movement in terms of interest rates this year. We don't expect a major sort of increase or reduction in interest rates across sub-Saharan Africa. We may see some reduction in interest rates where inflation is falling significantly. For example, in Ghana, we do expect 1 or 2 interest rate cuts this year. But in South Africa and Kenya, interest rates are close to record lows, and we are seeing an increase in inflation. So central banks have probably very little scope to cut rates. And in markets like Ethiopia and Angola, inflation remains very high, and there's considerable downward pressure on currencies. So there's very little scope for interest rate cuts. In terms of how businesses will be affected, so lower inflation is broadly positive for customer spending power. So we could see sort of improvements in customer spending as a result. But borrowing costs are likely to remain high in sub-Saharan Africa. And interest rates, because interest rates aren't likely to fall significantly, access to affordable credit is not likely to improve dramatically over the course of 2021. So high borrowing costs are to be expected.
Okay, so thank you so much for the update, Matt Kindiger, Associate Practice Lead, SSA Frontier View. Thank you so much for your time.
Thank you.
So the African Development Bank has launched a credit facility of up to $2 billion aimed at funding women-owned small and medium enterprises in multiple African countries. The institution will work with African Guarantee Fund, which offers a partial insurance for loans to SMEs to disburse the loans through banks in the program dubbed Affirmative Finance Action for Women in Africa. Banks in Cameroon, Democratic Republic of Congo, Kenya, Rwanda, Tanzania, Uganda are signing on to the program. The initiative is expected to reach an average of 18,000 women, small and medium enterprises, and create 80,000 direct jobs. It is estimated that African women face a $42 billion financing gap due to lack of access to collateral in the form of land and property. And the World Bank says Morocco's budget deficit in 2020 remains under control compared to most of its neighboring countries. The Bretton Woods institution emphasized that Morocco's debt structure has some risk-restricting attributes, such as the low weight of short-term debt and extremely low percentage of external and foreign currency debt. However, the bank says it will be necessary for Morocco to meet its goal of steadily reducing its budget deficit in the coming years in order to preserve this degree of sustainability. The World Bank says that the measures should help Morocco to increase budget efficiency, expand the tax base, and make tax collection more competitive and fair. And after nearly 6 months without a leader, the World Trade Organization looks set to name Nigeria's former finance minister, Dr. Ngozi Okonjo-Iweala, as its first female and first African leader. The General Council of the World Trade Organization will meet today to consider her appointment. The announcement follows a statement by the Office of the U.S. Trade Representative expressing strong support for the candidacy of Ngozi Okonjo-Iweala to lead the Global Trade Club. The statement by the Office of the U.S. Trade Representative notes that the Biden-Harris administration stands ready to engage in the next phase of the WTO process for reaching a consensus decision on the next WTO Director General following Korea's Yoon Myung-hee's withdrawal of her candidacy for the post. And now we get the oil updates. The oil prices at their highest in more than a year earlier today after a Saudi-led coalition fighting in Yemen said it intercepted an explosive-laden drone fired by the Iran-aligned Houthi group. Rising fears of fresh Middle East tensions. Brent crude was up 1.1% at $63 a barrel after climbing to a session high of $63.44, while U.S. West Texas Intermediate crude futures gained 1.5% to $60.33 a barrel. Oil prices have rallied over recent weeks also as supplies tighten, due largely to production cuts from the Organization of the Petroleum Exporting Countries and allied producers in the group OPEC+. And gold prices eased in early trade today after U.S. Treasury yields jumped to their highest in nearly 11 months in the previous session, with platinum scaling a 6-year peak on expectations of supply shortfall. Spot gold fell 0.1% to $1,821 per ounce, while U.S. gold futures slipped 0.1% to $1,822. Platinum rose 1.1% to $1,265 after hitting its highest since January 2015 at $1,269. Elsewhere, silver gained 0.4% to $27.46 an ounce, and palladium climbed 0.1% to $2,389. And that's a wrap on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.